Like to welcome Ian Armfield from the LGPS and note that we have apologies from Richard Shepherd, Ruth Gilbert, who is being substituted by Anthony Cross, and Declan's report will be presented by Bulesh. Please can I ask all members and officers that they have their microphone on mute until they wished or are invited to speak. Otherwise, please turn your microphones and your videos off. And with that, welcome to everybody who is here this morning. I'm Rosita Page, your chairman. And our first item is the minutes of the meeting held on February the 8th, 2023. Are we all in agreement? Yes, I assume so. Yes. So everybody is in agreement. So we move on to item 2 on our agenda, which is the question time. Now, I have received no questions. Item 3 on the agenda is to advise of any other items which the chairman has decided to take as urgent. I have not been informed of any items, and so we move on to item 4. And that is declaration of interest in respect of items on the agenda. Does anybody on this meeting have any, I've got a blunt moment then, interest to declare? I see no hands up, no interest. Oh, hang on. Manjit, did you? Because you just flickered. No interest to declare on any items of the agenda. Therefore, we move to the LGPS Central Joint Committee and Annual General Update Meeting Report, which is on pages 11 to 18 on the agenda. That is being represented to Bulesh, and we will also have a verbal presentation from Mr. Ian Armfield of the LGPS. And I hand over to Bulesh and switch my camera and microphone off. Thank you, Bulesh. Welcome, Mr. Armfield, and over to you both.
Thank you, Chair. Trust you can all hear me fine. I'll rattle through this paper, but stop at any time that you want to ask any questions, stick your hand up or just stick your camera on and ask a question. It's not a paper that we bring very often, but we've taken the opportunity here to give you an update on LGPS Central, and Ian Armfield is obviously here to provide a verbal update at the end of this introduction paper. So the purpose of the report is to provide the board with an update regarding LGPS Central's joint committee and annual general meetings. We've just said Ian is available and he will be giving a verbal presentation. A bit of background is on points 3 to 5. So November 2016, going back a bit, the local pension committee approved the proposed governance structure for the investment pool that was established to manage the assets of 8 Midlands-based local government pension funds. Just for clarity, these are the Leicestershire County Council Pension Fund, Nottinghamshire, Derbyshire, Staffordshire, Worcestershire, Cheshire, Shropshire, and the largest of all of the funds, West Midlands Pension Fund. Taken together, they have assets totaling well over £45 billion. And by comparison, our fund, the Leicestershire Fund, has assets of about £5.5 billion as at the end of March 2023. And all other things being equal, given our fund is cash flow positive, that number should grow over time, given benefits being paid are less than the total of employer and employee contributions. A bit more background, it was agreed that the chairman of the local pension committee should act as the fund's representative on the shareholders forum and the joint committee. He is in effect Leicestershire's shareholder and votes on matters raised by LGPS Central on behalf of the fund. Any questions at this point before I move on? No, okay.
No hands up.
Thank you, Chair. Bit more background. So we've got this lovely graphic on the next page at point 8. So LGPS Central has been in operation since April 2018. And our fund, the Leicestershire Fund, is a stakeholder from two different perspectives. So not only are we a co-owner of the fund, of the company, so a 1/8 owner, but we are also a recipient of investment services in that we pass funds to LGPS Central to manage, just in the same way that we have other managers on our roster that manage funds for us. So, you know, for example, Legal and General. These interests are managed through the Shareholders Forum and the Joint Committee, as well as the pension fund's funding strategy, investment strategy, and conflicts of interest policy. That graphic, which I talked about earlier, you'll be familiar with many of the terms in that graphic for point 8, other than ORCA in the bottom right corner, and that is the Operations, Risk, Compliance and Administration Committee. You can see that the graphic is split into two. We've got the shareholder client side on the top half, and then we've got the company, which is LGPS Central on the bottom half. So you can see all the relevant bits. You can see the board, and you've got the remuneration committee, the nominations committee, the audit committee, all the kind of things you'd expect to see on a normal company. On the left hand side, you've got LGPS Central as the operating company, which creates investment vehicles for ourselves and other pension funds to invest in, and those investment vehicles are looked after or regulated by the FCA. You can see there on the side. So it's not complicated, but you know, I'm happy to take any questions if anybody's got any regarding that graphic.
No hands up.
Okay, I'll move on. Thank you, Chair. So the Joint Committee deals with the investor functions related to the fund's investment in the collective investment vehicles. It meets twice a year and it's comprised of 8 members, i.e. the 8 funds are represented. Point 11, the supervisory body of Central, LGPS Central, is the Shareholders Forum, which focuses on shareholder-only issues. The Shareholders Forum includes representatives from each of the 8 pension funds that we've talked about earlier, and the Leicestershire Pension Fund's representative is the chair, like we said earlier. Point 12 talks about the types of matters the Shareholders Forum deals with. I won't read them out, but you can have a quick look at those. 13, the Shareholders Forum normally precedes the general meetings of the company, allowing discussions to take place in advance of decisions being made at the meeting. It's a meeting of the shareholders who are accompanied by the respective officers in most cases. 14 to 16 talks to updates from past joint committees and shareholder forums and company general meetings. I don't intend to talk to each. They're fairly self-explanatory, but for the most recent meeting, the Shareholders Forum, which preceded the company meeting, this is points 23 to 26. This meeting takes place usually about February each year and includes resolutions regarding LGPS Central's budget, i.e. how much it's going to cost to run it for a year, and their business plan, i.e. what are their plans for this year? What vehicles are they likely to develop, and what are the main aims? That's an annual process, includes all partner funds, i.e. the eight shareholders, along with Central, working through the budget and the business plan details before a finalised position is presented to the shareholders, which is subsequently put to vote at the general meeting. If we just move to point...
can I ask you a question, please, Ulrich? On point 14, the actions agreed, it includes a risk register. Now, how does that process follow if any risks are identified? How are they remedied? You know, just talk me through that. Very simple question, I assume.
Okay, so similar to the risk register we have for our fund, LGPS Central holds its own risk register. So it's in a very similar format, i.e. we list the risks and what the consequences are of that risk, what actions are taken, what mitigation there is, and then there's a reg rating accordingly. And it's reviewed by Central, and it might be something that Ian's able to talk about, given it should fall within his remit of audit and risk. Should we hold it for a bit later as well? So I'm sure we can provide a bit more flavour using a bit of his background and any knowledge he's gained since he's been in post.
Yep. That's fine. Hang on. And Manjit has got a hand up. Over to you, Manjit. And if Mr. Armfield can hear me, he is frozen.
I can hear you. I don't know whether you can hear me.
Yes, we can hear you. Just your frozen screen.
I'm sitting in.
Thank you. Just got a frozen. Okay.
Okay. Thank you, Chair. Just to clarification point. On item 20, it says there are 8 resolutions were presented, and there's 4 that are presented there as being receiving unanimous approval. Is it just a typo that the other 4 are not listed there, or is it were there only 4?
I'm just having a quick read. Item 20, you say?
Yeah, on page 14.
Adoption, approval. Oh, the approval of the directors would be separate. So I suspect re-election, they're more than one. Yeah, that's probably what's happened there, Manjit.
All right, okay, that's fine. So nothing substantial is missing from there then?
No,
okay.
no.
Thank you. Thank you.
Thank you, Manjit.
I'm just going to move forward to lost where I was. I'm just moving down the paper. So 2930.
You were resource implication, starting 31.
Oh, hold on. I was just going to add, following the September, so this is 2022, September's annual general meeting, Central wrote to shareholders for their approval of 2 proposed non-executive directors to replace 2 outgoing non-executive directors whose terms of office were due to expire. The final 2 candidates for the role were Kieran Barr and Ian Armfield, who we have here today. Who also acts as the chair of the Audit, Risk and Compliance Committee. They were both ultimately appointed on the 1st of November following shareholder approval. I don't have anything further to add unless there are any further questions. I was going to hand over to Ian for a verbal presentation regarding his time so far, his experience, and what he sees is the challenges and major tasks to do for the coming year.
Okay, there are no hands up. Thank you, Bhulesh, and over to Mr. Armfield.
Thank you very much, and good morning once again. I'll apologise now if I do break up. I'm sitting in a hotel bedroom, which ought to have good Wi-Fi, but and it was all right last night. But this morning, some of you started to freeze, so I hope you can still hear me. As Bhulesh said, and he's given a very good overview of LGPS Central. We're a unitary board, which means that we have a mixture of executive and non-executive directors. So the chief executive and the deputy chief executive are both on the board, and there are 4 non-exec directors, including myself and Kieran, who joined just 5 months ago, replacing predecessor of ours who'd been on the board since LGPS Central was originally created. My background is firmly rooted in investment management and pensions. As you will have seen in your papers, I spent most of my executive career, if I can call it that, as a partner at PricewaterhouseCoopers, specialising in pensions investment management. And then for the last 11 years, I've been a non-executive director in a number of organisations, including Nest, including an insurance company and a listed investment trust, private sector pension scheme, and LGPS Central, which is effectively an asset manager. So quite a broad range of different organisations, but all complementary to the pensions and asset management industry. Can you still hear me all?
Yes,
yes, we can.
Good. I'm just checking occasionally just to check, so I don't want to speak to myself.
No, I will let you know.
That would be good. So as Bhulesh said, I'm chair of the Audit, Risk and Compliance Committee. So I guess my role there is to lead the board's oversight of our risk management and assurance, providing appropriate scrutiny of the control environment, which I think is strong, but always can be improved. Support initiatives by management to further improve and refine things, and bring new perspectives from my experience elsewhere to help shape the evolution of our governance and control environment. Outside of that committee, my role obviously as a director is to contribute to the strategic discussions and monitoring of the company's activities, ask the searching questions, challenge the implausible explanations, and very importantly, engage with you, partner funds and other stakeholders, and apply, appropriate healthy level of scepticism at the appropriate time. In terms of what the Audit and Risk Committee focuses on, as the name implies, audit, risk and compliance, but I think it's more than that. It's the things like the integrity of the financial statements. So you invest in 6 of the sub-funds of the ACS, and we are obliged by regulation to produce annual audited accounts of the ACS, and we also do half-year accounts of the ACS, which are unaudited. So obviously part of what the committee's role is to scrutinise the preparation of those accounts, which you rely on and your auditors rely on, and ensure that they've been appropriately and accurately prepared, and the audit of those accounts, which is done by Deloitte, is also being done appropriately and on a timely basis. We also have internal auditors, as you do, but ours are directly under our control. We use KPMG, an external audit firm doing internal audit, and they have a rolling plan of work that looks at all aspects of Central's operations. So we scrutinise their plan each year and the findings of their work, and make sure that management follow up on any recommendations that come out of that work. The audits that I've seen over the last 6 months or so have all been satisfactory or better, but inevitably there's always some recommendations for improvements. No organisation can stand still, so we make sure that those are followed up and dealt with on a timely basis. And I guess if there's one priority for me, is there's a bit of a backlog of recommendations in terms of getting those resolved on a timely basis. So we're chasing up on that. We also produce what's called an AAFO 120 report, which is basically a report on the controls around certain of our investment management and administration activities, which again is shared with you as a partner fund, and should be something that your auditors have regard to when they're doing their audit. I believe we're the only one of the pools currently producing such a report, or we were certainly the first pool to produce such a report. I think one of the things that's important to me is that we better understand how you use that report, whether you use that report, and how, if you don't use it, we can make it more relevant to how you might use it. As a regulated entity, we obviously have to ensure that we have sufficient regulatory capital, so we monitor that within the committee, have to produce an annual statement to the regulator of our regulatory capital. You'll be pleased to know that we've got more than 200% coverage of the capital we're required to hold by the regulator, and that's likely to steadily increase over time, very modestly. So as owners of the business, there's nothing that you should be concerned about on that front. And then the other two aspects of risk, we obviously think about our risk appetite for the business. We have a risk register, as was touched on earlier. We review that, as I'm sure you review your risks on a regular basis. And all the assurance work that goes on, whether it's some internal audits, the AAF, compliance, which I'll come on to in a minute, and external audit, all gives us, and therefore indirectly you, assurance about how we manage our risks and the governance of our business. And finally, we have a compliance monitoring program that looks at all aspects of compliance. And that could be anything from compliance with our regulatory requirements to compliance around how we invest on your behalf, so ensuring best execution, that we don't fall foul of market abuse regulations, that we think about financial crime, fraud, conflicts of interest, and other such things. So a very broad range of topics that you will have heard about in different guises. Is that helpful by way of a sort of pen picture?
It is certainly most interesting and informative. Thank you. I don't know if there are any questions. Are there any questions up to this point from anybody? There are not. Thank you. So please carry on.
So I think the other thing that Bhulesh asked me just to talk about was, I guess, what were my priorities for the current year and some of our business priorities. From an audit risk compliance perspective. I think one of the things in any business that's only 3 or 4 years old is that we can always improve things. And I think one area that we're looking at from a risk perspective is ensuring that we can bring automation to bear wherever possible and replace manual processes if possible, because obviously that reduces risk. Equally, on manual processes, we can make them more effective, perhaps think smarter about the way we deploy manual processes. And another area we're looking at is scrutiny of our suppliers, and I'm thinking beyond our asset managers that we appoint, because I think the processes around that are very robust in terms of selection, appointment, and monitoring. But other suppliers, whether it's perhaps Bloomberg providing services to us, are we using those services in the most effective way? Give you an example somewhere else, we had a situation where people were downloading information which had cost attached to it, when in fact that functionality was sitting within the service agreement that they had with Bloomberg. So by actually using the system correctly, they were able to save themselves tens of thousands of pounds on workarounds that they thought they had needed to do. So it's just understanding what we're getting from our suppliers. Is it good value for money? Are we using it in the appropriate way, or are we paying for things we don't actually use? So that's just to give you some illustrations. And in terms of my personal priorities in this area, probably, as I touched on earlier, incremental improvements in all aspects of our reporting. So ensuring that what we report is accurate, appropriate, tells an appropriate and helpful story, and is timely, and that we're producing things in the right time frames so that you get things in the right time frames. Looking at our assurance across the piece and ensuring that what we get from internal audit or external audit or the AF or compliance are complementary. Everyone is looking at the same area and not looking at another area at all, so that we're getting the best value out of that assurance. We're in the process of renewing our internal audit mandate, so we're going through a pitch at the moment from a number of firms. We may reappoint the same firm, but it's an opportunity to refresh and rethink what we want from an internal audit service. And finally, encouraging all our advisors to add value or more value to what they do, or in some cases just explain the value that they're providing out of the services they provide, which perhaps isn't always obvious. So at that point, I'll stop. Whether that's what you found helpful or what you were hoping you would get, Bhulesh, I'm not sure, but hopefully some of that has provided you with a sense of one aspect of what Central do for you.
Thank you very much indeed. Could I ask you a question, please? When you have an two actually, when you have an organization as large as this, how is the communication across all of the stakeholders monitored so it is effective? Because as you just said, somebody spent some money where they didn't need to be, and quite a lot of that stems from basic non-communication, I would have thought. So, how is that monitored and addressed? And my other question is, I'm finding at the moment, pension issues are very much also an aspect of vokery, and I don't think they should be. It should be about the best interest. So quite a lot of residents always raise the point of responsible investment, green investment, you know, and so what answer would you give to that?
It was taking the first point. The example I gave was an example from my wider experience, so that wasn't a specific example of LGPS Central. So I think the message really for you is that, as Bhulesh touched on, we have quite detailed budgets, which ultimately are approved by the partner funds. We run a very well-structured and organised business, and obviously we, in some areas we might spend less than we budgeted, in some areas we might spend more, but overall we can only spend money within the envelope that has been approved by all the partner funds at the annual general meeting. And in recent years, you know, we've often marginally underspent that, because obviously it's always difficult to predict, particularly in the people area, when people are going to join in the year and therefore when their salaries will kick in. I mean, most other areas, budgetary control seems to be very good.
Thank you. And in relation to green and response.
I fully understood as a.
Hang on, I'm afraid you have gone. He is frozen again. Bhulesh,
Shall I?
Yes.
Yes.
Bhulesh,
Yeah, I'll take that.
Yeah.
Yeah. So for questions regarding green or climate type questions that we get at local level, we do have a responsible investment policy. So the fund, the Leicestershire Fund, has a responsible investment policy, and you'll note that recently the local pension committee, after extensive engagement and consultation, approved a climate net zero strategy as well. So I'd refer a lot of these kind of questions to those two policies in the first instance. So we have a fairly extensive document which is on our website regarding climate strategy, net zero, but we also have an annual responsible investment plan. All of our managers have to improve their RI standards. Any new managers the fund appoints have to display and demonstrate that their RI credentials are in line with our policies as well. So, and we also measure the fund's green targets, attainment of those targets. So we're talking carbon intensities and the like every year, and we've been doing so for the last 3 years. And we now have hard targets for 2030 and also longer term targets for eventual net zero. So I probably refer people to those two policies in the first instance.
Thank you. I just wanted that on record again. Thank you, Bhulesh. Is there anything else? Are there any more questions from any of the board members? There are none. Is there anything else you, Bhulesh, or Mr. Armfield, you want to mention? Mr. Armfield is frozen on my screen, but as
I can see him moving on.
Okay. Okay,
you can hear me. I'm just sitting very still. I think that's all it is.
Okay, so thank you both very, very much indeed, and very much appreciated. And with that, I conclude this report. Thank you. Thank you very, very much. So we're now moving over. Everyone, all my paperwork. We're moving over to item 6 on our agenda on pages 19 to page 80, and that's the pension fund administrative report to March 23 Q4, and that is Ian. Ian, over to you.
Thank you, Chair. Good morning, all. Hope everybody's well. Hope you can all hear me okay. This is, as Chair says, the report for quarter January to March. I'll start by saying it was a particularly busy quarter, as you've probably seen in the report. I'll go through the key points. I won't go through every element, but happy to take any questions as I go through. as I say, busy quarter, and I'll touch on the key elements. First points I just wanted to highlight were the KPIs, the key performance indicators. They are shown at the end of the report in the appendices. Let me just go to the relevant page for you. They are found on pages on page 32. And we've got the Appendix A, which is the quarter 4 month KPIs, which is January to March. And we also have the full year's KPIs from April 22 to March 23 as Appendix B. There isn't anything I particularly wanted to highlight in either of them, other than to say that in general, I think they represent a strong quarter and year for the section. Almost all of the KPIs were above target, and some were, the remaining ones were close to target. So I just wanted to sort of highlight that as a positive throughout the year. In terms of the other areas, the workloads, which are on page 20 in section 6 onwards, they've remained fairly static through the 3 months in almost all areas. The 2 areas that remain the key concerns are preserved benefits and aggregations. They are the cases where preserved benefits are members who have left the scheme who aren't yet old enough to claim their pension benefits, so their benefits are frozen and then increase in line with inflation until the person chooses to take them. They are higher than we would ideally like, as are aggregations. Aggregations are cases where people transfer benefits together, so they may have worked in one employer, left that employer, moved to another employer in the fund, and we look at combining those or keeping those benefits separate for members. They're the 2 areas that remain the highest, and they are the areas we continue to target when the necessary resources available. There was a bit of a slowdown in aggregations and preserves, particularly in March, and that was because we were preparing for the year end, and the resource, we only have so much resource available, so we have to prioritise the key areas. In terms of other areas within the quarter, don't normally touch on the internal dispute resolutions, the complaints, other than to say, excuse me, we managed to resolve one of the long-standing cases that ended up at the Ombudsman, and I'm very, very pleased to say that the Ombudsman found in our favour, and there's no request from the Ombudsman to make any changes to the fund or to the employer in that case, which is really good. That case did actually ultimately reach the High Court, so I was pleased with the outcome of that case. In terms of McLeod and dashboards, there is a further report in Stuart's improvements that touches on that, so I'll skip over those if I may. Year end, we are now entering into the 22-23 year end. It doesn't seem 5 minutes ago since I was talking about the previous year end, but we're into another one. In February, we wrote to all the employers. As in previous years, the year end deadline for employers to submit the data is the 30th of April. I'm pleased to say that a large amount of employers have already provided the information, which is great. The area of concern is the East Midlands Shared Service Centre, and that is because of the move of some of their payroll systems to alternative payrolls for some of the employers, especially the schools and academies who are moving to alternate payroll providers, and we must complete the information for the year to point of leaving with the county and the EMSS before we can then submit and post the new information with the new payroll provider. So it has to be done in a chronological order, otherwise the information doesn't post correctly and you'll only have part year information loaded for members. So that is a concern, because there are a lot of people involved in that, impacted on by that issue. That said, we're working positively with colleagues in East Midlands Shared Services. I just want to flag that as a potential concern. It's not really even a risk at this stage, but I'm just flagging it at this early point just to make you aware. But I don't anticipate there being any ultimate failure on us to meet any statutory deadlines for year end. In terms of other changes that took place in the quarter, this is why partly it was such a busy quarter. We had the spring budget. The spring budget took place on the 15th of March, and government announced changes to the lifetime allowance and the annual allowance, both tax pension areas that are already complex, and we had to do a review of that area and make changes. In broad terms, what happened in the budget, without trying to get too technical, and I will try and keep this as simple as I can if I may, the lifetime allowance was kind of scrapped, really, although it wasn't actually scrapped. What they did is government have decided to keep the annual allowance for the lifetime allowance for a little bit longer, but make the tax charge nil. So effectively, by changing the tax charge to nil, it effectively takes away the lifetime allowance. And then in future, they are intending to completely scrap it. That involved us having to make some manual changes for individual cases that we were working through. So we, we recalculated a number of benefits that were previously affected by the lifetime allowance and then weren't. The annual allowance, what's happened with the annual allowance is the £40,000 growth has now increased to 60,000 from 23-24. So that allows people to have greater pension growth moving forward before they incur a tax charge. So that's obviously positive for members, scheme members. We immediately saw quite an increase in interest in people then wanting to pay additional contributions into the pension scheme to effectively maximize their potential growth before they get a tax charge. So we received a lot of queries on that, and we're still receiving more in that regard. So I do anticipate an increase in people paying extra off the back of that tax change. In terms of other areas we had to make changes on in that, we obviously changed communications, information on the website, letters to individuals, and member calculations. System changes will follow, so a lot of that was done manually, but the systems will change to catch up, and we expect that will happen in the coming few months. In addition, also in the quarter, they made a regulation change aligning the annual allowance pension input period, the PIP, to effectively to the tax year. This is based around the calculation of the annual allowance. It's a particularly technical point, but what it effectively means is it strips out the pension increase growth from a member's pension input growth, thereby meaning the growth is lower and therefore the tax charge is reduced. Again, these are manual calculations, and the system will catch up. But again, it's a technical change that we've had to make in the quarter. The good news there is that until we run the full annual allowance growth, which will be done later in the year, the system will have been changed by that point, so we won't have to do them all manually. It's only cases that are being affected at the current time. In addition to that, in March, the escape rate, which is the superannuation contributions adjusted for past experience, it's a very catchy title, as you can imagine, discount rate was adjusted to take account of long-term gross domestic product growth. So what that effectively means is that the escape rate, when that changes, the factors used in various calculations within pensions have to change. So we are still working through that. We are having to stockpile certain elements of work which we can't do at the moment because of the escape rate change. The factors are coming through between April and May. So we are reintroducing elements of work as the escape rates come in, escape rate factor changes come in. It does affect certain cases like certain transfers, divorce calculations, and a number of others actually. There's quite a few, but the key ones are transfers and divorce calculations. Where we can continue with the cases we are doing, but where the escape rate change is affecting the calculation, we're having to stockpile those and let the people know. So those three changes, the escape rate change, the PIP change to align the annual allowance, and the scrapping following the spring budget of the lifetime allowance and annual allowance changes, all impacted on us in the quarter. In addition to that, we concluded the valuation. The valuation, as you know, has been going on for about 18 months, and it's a massive exercise that we go through every 3 years. In the period that was concluded, and Pensions Committee approved on the 3rd of March the final valuation information. I've attached the final valuation report as Appendix C. I don't propose to go through any elements of that. You've seen much of that information already in various previous reports about things like the assumptions and things of that nature. But the key information in the final valuation report is it details all of the employers' employer rates for the following 3 years, and all the employers have been written to and should now be amending their employer rates accordingly. So that concluded a large exercise for us. So that was a great exercise concluded. In terms of other areas, employer risk, which is on page 26, section 43 onwards. You may recall we employed a new colleague to help us work through employer risk and monitor risk moving forward. This tended to be work that we did sort of split between us and our colleagues in legal services, but we've taken this work in-house within pensions. And since then, in this particular quarter, I'm pleased to say we concluded a lot of the historic outstanding cases. They're the ones listed on section 48. So you can see in the on point 48, a large number were concluded, which is great. So we've moved forward a lot on those. And actually, since I wrote this report, 3 others that were listed in the table have also concluded as well. So that's proven really positive. Whilst we still have a number of outstanding issues with employers on admission bodies and bonds, none of them are causing me major concerns. Those that do and have done in the past, I've highlighted them to yourselves, and we've written with your support to employers to help us. None of those in the list at the moment cause me any major concerns. While some are high risk, that is because we're now at year end. and we need to conclude them in order for the members to get included for their annual benefit statements. That's why they're high. In terms of value and membership numbers, they actually don't, they're not as high as we'd probably need them to be in terms of membership numbers. So I'm comfortable with that. I'm aware I'm talking a lot, so I am concluding shortly, so apologies if I'm taking a little while here. And the final thing I wanted to say is regarding the Hyman's online training. This is the governance, knowledge and understanding, sections 49 to 51. You may recall I collated comments back from yourselves and Councillor Shepherd regarding the online training from Hyman's, as did a few other funds. That information was fed back. Hyman's were very receptive and very keen to receive the online feedback, and they appreciated it and thanked you for doing so. They've now prepared a new Hyman's online training, and that's going to go live in early June. What it does mean is that the online training you've done previously will need to be done again. Now, I know that might seem frustrating, but what they've done is they've simplified it. They've increased the various elements into shorter, simpler sessions to work through to make it easier. So that was off your feedback. And they've also obviously made any changes, and there have been some changes, which is hence a need for us to do them again as well, because we've got to make sure we're up to date with the latest information and not the historic information. The information will be rolled out in June, but I wanted to make you aware at this early stage so you're aware that that will be changing in due course. I'm happy to take any questions on any of the elements I've mentioned there, Chair.
Thank you, Ian. And as always, it's such a comprehensive report. Now, just a couple of points. I think Caroline's hand popped up. But before I go to Caroline, any comments on the pension fund report starting on page 33 from you? And the other thing is, if we are all going to do a new module, maybe we'll have a thing between us offline at one point, how we can probably best address it. Maybe we can call a short Teams meeting with members of the fund to just have a little bit of a talk through and a session, so we're all on board and we all, we can all do that, because I most certainly I think the worst member who haven't managed to do that. So, and there are probably other members who are not IT or FA. So if we can have a few seconds, we debate that, or maybe after on our training session, how we can best take that forward. Thank you again for your report. Over to you, Caroline.
I really just wanted to say, in taking into consideration everything that you've had to deal with in the last quarter, I think the quarter end results are outstanding. I really genuinely do think that. And I think the team have done so amazingly well, because you have had to deal with so many matters that weren't anticipated. So many things have come, as curveballs to you. But on saying that, you've managed to get in exactly, the place you need to be. So, that's excellent. Thank you for picking up the training. So in agreement with Mrs. Page that I do think it might be helpful to get us together to do the training. I don't know whether that's possible to do it together, because I think from that we can also have a little bit of a debate and discussion on those elements that we're still not quite sure of. And then that will enhance the training even further. So yeah, really be happy to take part in anything of that nature that's set up for us. But thank you for raising it. I think that's been really helpful, because I'm sure that's benefited an awful lot of other people out there, not just Leicestershire County Council.
Yeah, thank you, Caroline. Firstly, thank you for your comments on on the quarter and the KPIs. I appreciate that very much, because it has been a challenging quarter, and I won't pretend it hasn't, because it has. And we're pleased to have maintained the KPIs as well as we have, really. So thank you ever so much for that. In terms of the training, what I should have also said, and I'm really glad you both made that point, is we've actually invited Hymans in on a face-to-face training session as well. And I'm sorry, I should have mentioned that. That's going to take place in June. I will confirm the date. It will be both for board and committee members. We're going to have Hymans there, and we're going to have another external speaker, and myself and Bulash and a number of other officers may also do various parts as well. What we've done is we've looked at all of the feedback from board and committee members from their self-assessment returns, and thank you all of you for completing those. I think I got 100% return from board, which was fantastic, so thank you all. We collated that information, and we've gone back and highlighted those particular key areas that needed sort of maybe either a review or further information, or maybe they're new completely. So we've highlighted the key areas that have come up as the highest areas of knowledge and need, and we're going to do a face-to-face as well to coincide with the online training to kind of hope dovetail the two together as well. And that should, I think, be in June as well. So I'll come back to you on that. So thank you.
Thanks, Ian. Thank you.
With Caroline's, the points she just made, and I know we are very appreciative, but can the minutes reflect our appreciation? And can you pass that on, Ian? Because it is, and I've also thought, when you mentioned the High Court case, I think that is a wonderful accolade to, the service that, and I think we should somewhere in the minutes refer to that as well, because I think it should be noted, because to have an issue being taken all the way to High Court and, come away glorious, that deserves a pat on the back. So anyway, there are no other hands up, so thank you very much for items. I've lost track now as well. Item 6, now we're going over to item 7, which is also yours, I believe, and that's a report for risk management on internal controls, page 87 for the matrix and 91 to 94 for the performance. So over to you again, Ian. Thank you.
Thank you, Chair. It touches a little bit on what Mr. Armfield was saying earlier about reviewing internal controls and having the risk register. As you know, we have the fund risk register, and we review that quarterly, and it goes to both the board and committee. We did, myself, Bulash and Kat Tui did a thorough review of the risk register in March. And we basically used the opportunity to spend a bit of time looking at the layout or the risks, the scores, and just do a thorough review, because every year we find it's helpful to do that. And off the back of the valuation completing, and also the back of the net zero policy being completed, we thought it was now a good time to do that. So what this report does, and I don't propose to go through it line by line, far from it. I think that for time alone, what I wanted to really say is that we've done a thorough review of the risks. There's still 6 different risk areas, as there was before, so nothing has changed in that element. So there's still the investment, liability, employer, governance, and operational and regulatory risks. We score them both based on impact and likelihood, as we have done before, and then we have a residual score based on the things that we're either putting into place or plan to do so. The risks are then categorized red, amber, green, high, medium, low. While some risks still are amber, they may continue to always be amber, because whilst let's say the likelihood is low, the impact can always be high. So by the nature of what we do in pensions, if there is a really major change or major impact, it can keep the risk at amber throughout, but we mitigate that as much as we possibly can. And we always run the risk register with our internal audit colleagues and in fact, Neera's on the call today, isn't she, on the meeting today? So Neera always reviews the risk register prior to it being reported. And rather than me go through each one in turn, what I've done is I've just listed in the report the risks that we looked at, that we've made any changes to, and just a brief summary of each one below in terms of what that change has been. But I wasn't proposing to say any more than that, but I'm very happy to take any questions.
Yes, I've noticed that, and I think that's great, because not only is it self-explanatory, but it's set out very clearly for anybody who would be looking at the report, rather than to go through the matrix that starts on page 87, which is, sometimes a little bit difficult to go through. So that's really appreciated. I have got no questions, and there appear to be no further questions from any members of the board. So I believe that concludes this report as well, Ian.
Thank you, Chair.
Yes, thank you very much indeed. So we're now on page 99. That's agenda item 8, and it's going to be introduced by our audit manager, Neeru Patel. The appendix start on page 99. And this is to inform the board about the internal audit arrangements and to summarize the outcomes. Welcome, Neera. Thank you very much for attending our meeting, and over to you.
Thank you very much, Chair. Firstly, for anyone who doesn't know me, I'm Neeru Patel, the audit manager who oversees the pension fund audits. Here to present the report today. Purpose of the report is to explain the internal audit arrangements for the pension fund, and also to provide a progress update on work completed, and to present the plan for this financial year. The background section of the report, which paragraphs 2 to 5, explains the requirements for effective governance and the proper administration of financial affairs, including the need to have a continuous internal audit function. This board has got responsibility for receiving the plans and results of internal audit activity. The next section at the top of page 96, paragraphs 6 to 10, explains in more detail how the team works to the internal audit standards, how it plans audits and reports findings and recommendations. Paragraph 11 is information on the work conducted in the last financial year, and this is outlined further in Appendix 1, which is pages 99 and 100. Once again, I'm pleased to report an overall positive position with no high importance recommendations. Moving on to paragraph 12, that throws some light on the biennial National Fraud Initiative, NFI, which is a counter-fraud data matching exercise. Data was uploaded for the latest exercise in early October 22, with reports released end of Jan, early Feb. So investigations on those reports are still at the early stages. In addition to that, the Pension Service also subscribes to the 6-monthly NFI mortality screening service. This is to identify overseas pensioners against the DWP's deceased persons database. The last exercise was flagged up 6 cases, all of which have been pursued. There's currently, I understand, 4 cases outstanding, with overpayments totalling less than £6,000. Moving on to paragraph 14, that explains that, as well as the internal pension service audits, the team collaborates with partners from other councils that own LGPS Central. And there's a 4-year rolling programme of internal audit coverage, which is completed on a rota basis between the 8 partner audit sections. The plan's due to come to an end following completion of the final 2 audits for 22-23, and the 4-year cycle will restart, but will be refreshed on receipt of an updated risk register. The table at the bottom of page 97 gives a very brief summary of performance during the year, and you'll probably notice there were 3 audits that were deferred into this financial year. This was purely due to delays in developments nationally. The recharge to the fund for last year's work was just over £23,000. The second appendix on pages 101 and 102 outlines planned audit work for the current financial year, so for 23-24, and explains how the plan was compiled. The cost of the planned 81 days of internal audit work will be in the region of about £30,000. This brings me to the end of the report. The recommendation is for the board to note the report, and I'm happy to take any questions.
There are no questions at all, except for me. And I'm a bit dim. In paragraph 14, it says that, you know, the internal working group made a 4-year plan. And the last sentence says, it is likely that Leicestershire County Council will not be required to complete a pool internal audit work. So is it, what does it's not likely required mean? You know, just explain this to me. You know, if there is a 4-year one, it's a 4-year cycle. But if it says not likely, what would make them? Well, just explain it to me, please. Thank you.
Okay, no, that's a good question. Basically, the 4-year plan is split between the 8 partner funds. So 2 partners would do an audit each year on a rota basis. So we're down for year 2. Year 1 is another two of the partners, and we're due to complete in year 2 as one of those 8 partners. Does that make sense?
Yes, because I thought it was a 4-year cycle, and then, but yes. So yes, it's split. Yes, it does make sense.
We only do one every 4 years.
Thank you very much.
Thank you.
Thank you very much indeed. Board members, are there any questions? There are none. Thank you very much for your comprehensive report. Very much appreciated. And thank you for being here. Thank you. Over to the next report, page 103 to 160. And that is agenda item 9. And it is our regular update in respect of areas requiring improvement or not. And that is our Stuart. Hello, Stuart, and welcome.
Hello, Chair. Thank you very much.
Oh, and the appendix starts on page 111. Thank you, Stuart. Over to you.
Thank you. Morning, everyone.
Good morning.
Morning. So this report covers 2 main areas this time. The first section focuses on the key administration priorities for the year ahead. This is following on from the business plan and budget report that was presented to the board in February and was subsequently approved by the Pension Committee on the 3rd of March. The key areas that we will be focusing on this year are the pension dashboards programme, the good governance report, the McLeod remedy, the member self-service, the pension regulator's new code of practice, training for committee and board members, and a review of the fund's AVC provider. So some of these areas have been covered in depth in recent board meetings, so I won't necessarily dwell on those, but I will update you where things have moved on since they were covered. The pension dashboards program as a starting point. So this is the national project that has the aim for everyone to be able to log on to a website and see details of all the pension pots that they own. So this is not just LGPS. This is across all pension schemes within the UK. And the current position was presented to the board at the meeting on the 26th of October last year. So since then, the only change relates to the onboarding deadlines. So these have been put on hold. This was following a ministerial statement made on the 2nd of March, and this is to allow extra time to ensure that the project can be delivered. It's clear that this is an extremely complex project, and it seems that it's obviously important to ensure that the solution works fully before it's delivered, and more time is needed to achieve this. So we don't actually have news on what the revised deadlines are, but as soon as we know, then we will report back on those. The Good Governance project. This is something that seems to have been going on for some time. Between 2019 and 2021, the actuarial firm Hymans Robertson prepared 3 good governance reports for the National Scheme Advisory Board, with the intention of strengthening LGPS governance for going forward, particularly in light of some of the challenges that we're going to cover in this report. And the National Advisory Board approved all the proposals that were in that report, and made an action plan for the Department of Levelling Up to produce statutory guidance, establish the governance framework and implement the proposals. And the proposals were divided into 6 sections and cover various areas of governance. For example, the requirement to publish an annual governance compliance statement, the requirement to produce a conflict of interest policy, and also the requirement to produce an administration strategy. And at Leicestershire, officers have worked through the recommendations and have taken steps already to put many of these into place, though there are areas where we can't really do anything until the final guidance is produced. So the current position nationally is that progress has stalled in the face of conflicting priorities and resource challenges. So at the moment, we're waiting for that final guidance, and once that's produced, we'll take appropriate action and report back to the board at that time. McLeod. So we covered McLeod in quite some detail at the last board meeting on the 8th of February. So again, won't particularly dwell on that, except to say that since that meeting, the 2 temporary officers that were appointed to assist with the McLeod work have had their contracts extended until April 2024. And then in addition, in early April, the government announced that a new consultation would be held in the coming months to seek views on an updated draft of the McLeod regulations that includes issues that weren't previously consulted on, which will include the need for scheme members to aggregate records to qualify for protection, where those members have more than one record, where currently one may qualify and one doesn't, as well as such issues as compensation and interest payments. The final regulations, though, are still due to come into force on the 1st of October 2023, and we continue to work on preparing for that day. It continues to be a big challenge, and again, we'll update you on future developments as they emerge. Member self-service, don't perhaps propose to talk too much about this, but just to say that we've had the Hayward MSS online facility since 2019. We currently have around 40% of our active members registered for the system, which allows them to take advantage of the facilities that are available, such as the benefits calculator and secure transfer of documents. And our pensioners do have access to pay slips and P60s through MSS as well. So we regularly contact employers to ask them to promote the benefits of registration to their members. And many of the letters that we send out to people encourages members to sign up for the facility. So we continue to work on ways to utilise the evolving functionality of the system. A process that moved the retirements process online for some registered users went live early in 2021. And following recent improvements made by Hayward, work is ongoing to develop a more elegant solution for those deferred members whose pension will shortly come into payment. So this will be simpler for the member to use than the existing process and will allow more elements of the process to be online. And we expect that this will be launched on a trial basis during May. So it'd be interesting to see how that goes. Any new scheme joiners are directed to member self-service as a standard process now. So they get an initial welcome to the scheme letter that instructs them to register either by using the QR code in the letter or the link provided. And that allows them to go on to member self-service where there's a dedicated new starters area, which includes a guide to the scheme and other documents that would previously have been posted. And as well as this, the system suppliers Haywards are currently developing new ways to include more automation, and we will continue to investigate how to put these into practice, which we would hope then would act as an incentive for more members to register for the system. The pension regulator's new code of practice. So this is expected to come into force this summer, and this contains new governance requirements and sets out the pension regulator's expectations of how occupational pension schemes should be managed and the policies, practices and procedures that should be in place. So initially, the plan is to perform a gap analysis to assess what actions should be taken to ensure that we are compliant. And we intend to do this in partnership with Hymans Robertsons, our actuaries, once the content is finalised. And progress on this area will be reported to the board regularly. Training. So we've already touched on training, and Ian's mentioned that there's a session coming up in June. Ian, my report says the 13th of June was the date. I don't know now if that's a provisional date or whether that's the actual date, but we'll get confirmation out to people shortly, I guess.
Yeah, I have checked subsequently, and that is correct, Stuart. Thank you.
Great. Okay, thanks. And then finally, details regarding the review of the fund's additional voluntary contributions provider will be covered in the next report. So just moving away from the key priorities, I wanted to cover the ongoing review of our aggregations process. So Ian's touched upon the aggregations as a concern in terms of the numbers, and just to run over what an aggregation is. So where a scheme member has more than one pension record within the fund, it may be possible to combine them. So we call them aggregations, and they've been part of the fund's administration process for quite some time, although the complexity of dealing with aggregations greatly increased in 2014 following the introduction of the care scheme. And currently we identify a possible aggregation when a scheme member begins a new employment. A new record is automatically created on the system, and any existing records for that member relating to former or concurrent employments are automatically linked to that record. So once we're aware that there are aggregations, then we contact the members with instructions as to what to do. And there's national guidance available explaining how aggregations are to be processed, and there are several different scenarios to deal with, and there are a number of key factors that are taken into consideration when deciding which scenario applies. So they include the status of the record, the length of the membership, and the leaving date of any of the non-active records that the member may have. And within each scenario, there are further factors, including pay and whether the member a changed employer, so that the officers take all this into consideration and decide which is the correct approach to adopt. And although some of the aggregation cases are relatively straightforward, there are an increasing number of more complex cases. These generally involve where a member has more than 2 records. It's not uncommon for scheme members to have 3 or more separate records on our system. Potentially all or some of those could be aggregated. So that the number of new cases each year has grown steadily, with broadly an approximate annual increase of around 5% in the last 3 years. High volumes of aggregation work is a national issue. It's not just confined to us, and this was recently discussed at the Hayward Regional User Group as part of a discussion regarding ways to increase automation around these calculations. And the aim of this review is to ultimately to reduce the backlog of outstanding cases. We estimate that on average approximately 650 cases are generated in a 3-month period. And this is the number of outstanding cases that would be deemed business as usual. We've currently got around 1,500 cases outstanding, so obviously we want to try and get that down. And it's been several years really since the aggregation processes were agreed. So officers have decided to review the current processes, and there are details of the action that can be found in the appendix. So our next steps regarding this review, we're expecting some aggregation letters to be produced by the LGA. These were expected to be made available in April, although they haven't been made available yet. So it might be that May is more likely. But when they do arrive, we'll review our existing letters and decide whether any changes need to be made. We'll also look at to see whether it would be beneficial for members to have a dedicated aggregations area on the website where they can refer to help them with their decision making. And we'll look at existing functionality and incorporate this into work allocation processes to allow easier management of case distribution. And we'll report back to the board at a future meeting on progress made. So I think that was all I really wanted to cover today. So if there's any questions, feel free.
Thank you, Stuart. Again, very comprehensive. And I've got a couple of comments.
Okay.
I'm working backwards. It is, first of all, our thanks, which has been mentioned to Ian to pass on, because it is quite, well, there is quite a workload. And when I was reading the report, I kind of thought, well, there's such a big backlog and whatever else. So, yes, you did say it's a national problem, but it's still our staff that has got to deal with it. And I really welcome that you say that you're reviewing it all, because if you're struggling with a backlog and so many cases, you know, a review is always good to avoid any mistakes being made going forward. Now, for members, can you please put the 13th of June in your diary? And Angie, can we send a note around? Because I know I've got a holiday booked straight after. Wouldn't want to miss that. My question is, well, I get to my question first. Another comment, more on the amusing side. I think Mr. McLeod really ought to go in the Guinness Book of Records for causing us and the world, the country, such a lot of aggravation and cost. But my question, member self-service. Now, right through, we're talking about more online, making the direct service more simple, and it is all appreciated, and that is the way going forward. But how do we do with people who have got, well, simply the people who don't want to go online, who find it a lot easier to do things by phone and haven't got IT provision? There are an awful lot of them. And I'm finding it at the moment that dealing with water issues, there are actually quite a lot of members who are struggling. So, and how about somebody who is blind or has some disabilities? I mean, I've had somebody, this is not in relation to the member self-service, it's something else. And he really struggled because he was so disabled, he couldn't use it, but there was no means to actually get any help. So if that scenario was to present itself, how would we deal with that, and how do we account for that within the member self-service sections?
Well, we're always careful to ensure that the paper is available for people. For the majority of work that we do, paper is still the default, although that we do mention that the member self-service is something that's available. Where members have specific issues with regards to vision and what have you, we tend to work with them to ensure that they get the correct format that they need. Some people ask for large print versions of documents. Some ask for electronic documents because they can feed it into a voice translator type device. So we're never going to be in a position, nor would we want to force people down this route. We'll always ensure that there will be paper versions available, and they still make up the majority of members. So we factor that in. But what we are keen to do is where we are offering an online service is to make sure that works well, that it's easy to operate, and it does what it's supposed to do. So we'll continue to do that as well.
Thank you, but it's nice to have those things also on record in case somebody looks at it. But thank you for that explanation. And I see Manjit's hand up. Over to you, Manjit.
Hello, thank you, Chair. Stuart, just a couple of things that, in terms of reflection from myself as a employee rep on the board, and it just, I guess, reflects that I use the system quite a lot when I need to. You mentioned P60s and pay slips. I had to use that more recently, and my experience was very good. And it was simple to use, as you said. And also, I've had cause to use the helpline a few times in the past, and it's been really good.
Right.
And also the email. I put in fact, yesterday I put a question into your email section about 5:15, 20:05, and I got a response within half an hour, which is brilliant. So I think my experience so far has been very good, and I think it reflects the fact that Ian and yourself and the team are taking seriously customer feedback and comments and putting the service improvements in place. There's obviously more things we can do, but I think you're on the right track, and just wanted to say that. Thank you to you and your team.
Thank you, Manjit. That's appreciated.
And I think that is absolutely brilliant, Manjit, to have a so-called mystery shopper on our board, because, well, I am not, so I would never use it. So it's good to know somebody is there. The other thing it's really great to have Caroline on the board as well to get that other side, So yes, brilliant. Thank you for that, Manjit. Stuart, there are no other questions information on this report, so thank you. And over to agenda item 10, which is also your report, and that is the voluntary contribution report to inform us of the arrangements. Thank you, and over to you again.
Thank you. Okay. So this report is intended to inform you of the fund's additional voluntary contribution arrangements, including the choice of investments on offer to scheme members, and to give an overview of the provider's performance. But to take you back to the beginning, the local government pension scheme does have a regulatory requirement to provide an additional voluntary contribution scheme. Active contributors may opt to pay additional pension contributions, better known as AVCs. And Prudential have provided the Leicestershire Fund's AVC scheme since 1996. So AVCs are used to increase scheme member benefits and are generally used to increase a scheme member's tax-free lump sum, but they can also be used to increase their pension as well. An AVC could also be transferred to another pension scheme or arrangement, which may increase the options available to them. For those members that want to consider the options, they're always made available to them, but there is a free impartial service sponsored by the government called PensionWise that's available should members wish to discuss the options that they can choose. So at the time of writing, there was 867 active contributors paying Prudential AVCs and just under 2,000 pensioners who have additional LGPS benefits as a result of having paid into an AVC. There's also a provision within the regulations to allow an employer to contribute to their employees' AVC, and this is known as a shared cost AVC, which can be provided through a salary sacrifice arrangement. The decision to offer a shared cost AVC lies with individual employers, not the pension fund. And there are currently 4 employers within the Leicestershire Fund that offer this to their members. And under this arrangement, an employer may agree to pay an employee's chosen contribution amount to their AVC fund. And in return, the employee agrees to enter a salary sacrifice arrangement under which they accept a reduction in their gross salary, which is equal to the contribution amount. In addition, the employee is required to pay a fixed £1 each month as their individual contribution to the shared cost AVC arrangement. This contribution is deducted from the employee's gross salary and paid into the AVC fund in addition to the contribution from the employer that's under the salary sacrifice arrangement. And for employees, the advantage of this is that they will not pay tax or national insurance contributions on the amount salary sacrificed. And so as a result, will pay less national insurance, as well as the usual tax savings that apply to regular active scheme members. And for the employer, they also benefit from a reduction in the employer national insurance contributions. So in terms of how AVCs are invested, AVCs are invested by the PRU into the fund choice of each scheme member, who can choose to split their contributions into multiple funds if they wish. There's an annual management charge that's deducted from the contributions, and in some cases other charges may apply. The default investment option is the Prudential with profit funds, and I've included a breakdown of the various fund choices and charges within the report, mainly on page 119. The choices offer a range of risk from high to low, and obviously the returns will reflect that. Plus a type of fund known as a lifestyle fund, which automatically reduces the level of risk the closer that the member gets to retirement. And more information is provided in the fund guide, which is in the appendix. So as I mentioned, Prudential have been the AVC provider since 1996, and historically service delivery has always been good. However, from the end of 2020, there were some problems that affected the timeliness of payments to scheme members. And these included delays in disinvesting members' AVC pots, which leads to a delay in the pension section calculating and paying member retirement benefits, and also a delay in tracking payments from fund employers and investing members' contributions in a timely manner. And there are also delays in providing scheme members and the fund with communications on individual cases. And these were national issues. Again, it wasn't just us, and the board will be aware of this. But the Prudential did ensure that no AVC provider were financially disadvantaged by these issues. You may recall that the Prudential met with the board in May 2021 to discuss improvements. And since then, there has been a marked improvement in the service from the Prudential. But the Prudential do recognise that further improvements are still necessary and are working positively with all funds to achieve these. Officers, though, have decided to review the provision of the fund's AVC scheme. We've been with Pru for many years, and a review we believe would provide the opportunity to establish if there are more favourable options for the administering authority and for the fund's AVC payers. In the event that a new provider is appointed, the existing provider may possibly be closed to any new members signing up for an AVC, though existing members could remain with Prudential, although they may have the option to move to the new provider. So the review will take the form of a procurement exercise, and though the option to conduct an independent exercise was considered, officers decided that adopting a national procurement framework would be preferable, as this provides a consistent approach that other LGPS funds would be free to use. The aim is to conclude the exercise by the end of 2023. And we've set out a timeline of what has happened so far, starting in October 2021, when we asked Hymans Robertson to test the market and see whether there were any alternatives out there. And when they advised that there were, we contacted National Frameworks to see if they would be interested in developing an AVC procurement framework for LGPS funds, which they were, subject to interest from other funds, and which would include funds being prepared to work with National Frameworks to set one up. And Leicestershire confirmed that they were willing to do this. There has been some interest from other funds, and National Frameworks are currently in the process of setting up a meeting between those funds to start to take this forward. So at the time of writing, it was envisaged that an element of this framework would be aimed at employers who wished to set up a shared cost arrangement. However, we learned in the last few days that there is already a framework in place that deals with that. So that element will not form part of this framework. And future updates on this project will be provided at future board meetings. So happy to take any questions.
Thank you, Stuart. Very, very interesting. Just a silly question from me again. So all of this is very important to a pension holder. And if I am Jane Doe out in the domain with, how will I know that, I can do all of these things? How can I access all of this information? How does it get to me? Just talk me through that.
Well, we have information on our website regarding AVCs. There is when people join the fund, it's included in the guide to the scheme, which is on the website, but it's also available in paper for those that wish to receive it. and that provides information to contact the Prudential, who then can go through the various options that are available to them.
Oh, okay, so it's quite simple. It is there in front of you, and then if you wish to, you can follow the process up.
That's
yeah,
right.
Great stuff. Thank you. Very interesting report. No hands up. Thank you very much for that, Stuart. Much appreciated. And with that, we are going to agenda item 11, which is the conclusion of our agenda. And there are no other items we have marked as urgent. The date of the next meeting for your diary, I believe it's the 18th of October, same time, same place. For your diaries, please, the 13th of June. I'm sure Angie will send out a reminder to all, so we can put it all in our diaries. And for everybody, thank you very much for joining us this morning. And for the board members, please stay online for the training from Ian after this meeting. So we close the official board meeting at 11:35, and thank you very much. Thank you.
Thank you.
Bye-bye.
Thank
Have a nice
you.
rest
Bye-bye.
of the day.
Thank you.
Bye.